Excellent. So again, welcome and good evening to everyone welcome to the Champions of HR Mentoring Program for Human Resources Management Professionals, particularly for early and mid-career professionals who are seeking to improve their skills and their capabilities as human resources management professionals. Human resources management is certainly a very important aspect and part of the success of our organizations, our communities, our society, and indeed our world. At the end of the day, the entire purpose of our education and our youth and everything that we try to do growing up is to grow up so that we can get a job, so that we can have a career, so we can pursue a vocation, so we can start a business or an enterprise, so that we can add value to society. And all of those things happen in the workplace, where human resources management is critical to ensuring that the workplace is conducive and the workplace is productive. So part of the the legacy or the rationale behind this program is to take some of the experience that I have gathered as a human resources management professional, working in HR, supporting HR, building HR organizations for different organizations in different sectors, and also learning and researching and studying and observing HR and taking all of these experiences to say, how can we do HR in a better way? One of the ways we can do HR differently and better is by acquiring the skills for business acumen. Business acumen skills are important to human resources management professionals. And that, ladies and gentlemen, is what we are going to be exploring today. Business acumen skills for the human resources management professional. As always, my name is Omagbishe Baro, and I am the founder of Learning Impact, a Nigerian-based corporate training, strategy consulting, organizational development, and life skills education company. And we have been working with different organizations over the years to support them in all of these areas and much more. And we are very happy to have all of you who have joined us. I can see a number of people who have become regulars in our mentoring program, and I congratulate you for that. And I hope that you will continue to participate and that you will even start to invite some of your friends and colleagues to take advantage of the program and all that it has to offer. So I'm going to put up my screen right now, and we will jump into the content for today. As usual, it's a short program. Due to popular demand, we have sort of extended it by about 30 minutes so that we can spend some time doing some activities, practicing some of the things we have learned so that we'll be better positioned to transfer these things into the workplace and create the impact that we want. So it's business acumen for human resources management professionals. So what are our objectives? What do we want to achieve? And in our usual manner, we would, I would run through the content that is on the screen, and then we would have some opportunities for interactions in between, and I would stop and pause and ask questions and give you the opportunity yourselves to ask some questions and to interact with the content. So if you've got a notebook and a pen, it's a good time to, take down some notes if you want. The content, the video recorded will be provided to all of the participants, as well as the PDF version of these slides. So please look out for them. We've got a WhatsApp group that is, trying to be as active as possible. And please, if you haven't joined that group, you can indicate with any of my colleagues that are captured as learning impacts on this platform, and you can chat with them, and they can certainly add you to the WhatsApp group if you're not there already. Okay, so let's jump into our content. It's business acumen for human resources management professionals. In terms of outline and learning objectives, as you can see on the screen, There are about 4 things that we want to achieve. As usual, we want to start off by asking, why is it important to study, to learn, to build capacity around business acumen? Why are business acumen skills important for human resources management professionals? Then I would introduce you to a very powerful tool called the Business Model Canvas, or the BMC. And I would explain to you what the Business Model Canvas is all about and how you, as a human resources management professional, can learn to use the BMC and how you can apply it to delivering better HR in your organization. Thirdly, we would talk about financial statements. You can't discuss business acumen without speaking the language of business. So we will speak the language of business, and we will talk about the different financial statements that companies and organizations have. We will talk about how to analyze. We will learn about how to analyze those financial statements and how to apply financial statements and financial statements analysis to your work in human resources management. And then we will end with a discussion on how we can apply what we have learned, the business model canvas, as well as financial statements and financial statements analysis to your work as a human resources manager. Okay, so everybody, that is the content. Apologies for that break in transmission. I was saying, so this are our learning objectives, and I hope that I am still audible. Can you just confirm that you can hear me?
Yes, yes, very well. I can hear you clearly.
Thank you, and apologies again. So these are our learning objectives, and we will proceed right away with exploring the importance of business acumen. So why are business acumen skills important for HR professionals? Why is this important? Well, the fundamental rule of human resources management is to drive performance. And I've said this in our previous interactions. The reason why an organization has a human resources department is because that organization wants the people who are the most important and strategic resources in the organization to perform. So think about that for a second. If the purpose of HR is to drive performance, then HR professionals must, number 2, speak the language of performance, speak the language of business. Yesterday, I was having a very interesting discussion with one of our clients, and I was saying to him that at the end of the day, he's a CEO. And I said, look, we're trying to build a management team and a management structure for that organization. And I said, look, at the end of the day, if your managers cannot speak the language of business, if your managers cannot come into a management meeting with reports, with KPIs, with metrics, if they cannot look at your financial statements and understand them and interpret them and use them in decision making, then you don't have a real business. You don't have a real organization. And he said, why? I said, because you, as the CEO, you only speak one language. When it's time to pay salaries, Salaries are not based on emotions. Salaries are numbers. So a salary is a number, isn't it? And I'm sure we can all relate to this. When you have to pay your bills, when you have to pay your rent, when you have to pay your loans to your financiers, the only thing you do is to discuss numbers. When your shareholders ask you how well the company is doing, they're only interested in numbers. The language of business is numbers. And if you are going to be a HR professional that is going to add value and make a difference, as it's seen on the slides, then you must understand the language of numbers, the language of strategy, the language of business acumen, the language of financial statements and financial statement analysis. Because, my dear friends, that is the only language that we speak in business. That is maybe not the only language, but that is the first language of business. That is the most important. That is how we first speak in numbers, then we interpret everything else from there. And many people say, oh, maybe it's because you're an accountant. Maybe it's because you have a numeracy background. Well, maybe I am lucky, but here's the truth. Businesses speak the language of business. And if you are going to be a successful partner, a successful consultant, a successful advisor as a human resources management professional, then you too must speak that language. So we've dealt with our first learning objective. Why is it important for HR professionals to have business acumen skills? It's really about adding value, speaking the language of business, which is numeric, and of course, fulfilling that important role of HR as the driver, the custodian, the enabler of organizational performance. So I'm going to pause at this point and ask if you've got any thoughts, questions, or comments about this first part of our learning, why business acumen skills are important.
Good afternoon, everyone.
Good afternoon.
My name is Michael. So
Michael.
far, it's valuable that one of the most important reasons for HR is to drive performance, and the most important thing in driving performance, like you earlier mentioned, is that everybody seems to have ownership. People within the business truly understands that, this business is not just created for them to just get salaries. Salaries are good, but are they connected to the job? As in, are they creating value for
Mm,
themselves and even for the company at large? So it's very important that HR, like people would have in mind, is HR is the punitive part of the business,
mm,
where once people go wrong, they are the ones with the stick to
mm,
flog people when they go wrong. So that ideology, from what you
mm.
have mentioned so far, has been very, very valuable. That HR is created for performance, and people have to perform so that the business can work.
All right, thanks very much, Michael. I guess that was just your reflection on what you have learned or heard so far, and just lending your voice in terms of a comment to support it. Thank you very much. Would anybody else like to, share a thought? And let me just send that chocolate to Michael. He sounds like somebody who would like Toblerone. So, Michael, there it goes. Virtual chocolate. Catch it,
Thank you.
unwrap it, and you have to say so that you make the other people jealous.
Mm,
Excellent. Thank you, Michael, for being along and enjoying your chocolate. Would anybody else like to, ask a question, make a contribution, or even share a contrary opinion? Perhaps, this whole talk about business acumen is all bollocks and it's not really that important. And, you can succeed as a human resources management professional without it. Please feel free to, share what you think, and we can always have a healthy interaction around your thoughts. Okay, so it sounds like Everybody is cool. Everybody is learning. Everybody is waiting to see the rest of what we have in store. So let's jump into it. So let's start off with the business model canvas. So there are just two things we're going to do today: the business model canvas and financial statements analysis. Of course, a holistic course or program on business acumen will contain so much more, but there's so much that we can do in 90 minutes. So we are going to give it our very best shot. So the business model canvas is a tool that tries to express the business model of a company or an organization in one page, on a one-page canvas. The business model of an organization really is about what drives value in that organization. How does the organization use its resources, internal and external? How does it combine these resources to create value? What is sometimes people use the expression, what is the value chain of the organization? So the business model talks about or describes how the organization functions and how that functioning of the organization creates value. What are those key things that the organization pays attention to in its pursuit of sustainable competitive advantage? And you will recall from one of our earlier sessions, I use that expression a lot, that organizations and businesses are in the pursuit of sustainable competitive advantage. And we create that sustainable competitive advantage by pulling certain levers, by leveraging certain things. And some of those things are the components of a business model. So if you look on the screen, for example, you can see this is actually the business model of a real company. And I have just taken away the name of the company. Hopefully, let me check a quick scan that the company's name is not anywhere there. But I can tell you that the company is in the consulting business. So it's a management consulting firm that we also support. And this is the business model canvas. The key partners of that organization: the Society of Human Resources Management, Scale Up TT, Hermat, other consultants. What are its key activities? Thought leadership, creating podcasts, doing research. What are some of its key resources? Its old clients, the personal networks of the team, the professional networks that they belong to. What are its key value propositions? Its market reputation, its technology solutions, its evidence-based consulting, and so on. Who are its key customers, and how does it manage its relationship with customers? It provides email marketing. It looks at requests for proposals in the newspapers. What are its major channels? Websites, email, direct marketing. What are the major customer segments of this company? Blue chip companies, public sector agencies, business owners. What are the revenue sources of this company? Training fees, consulting fees, subscriptions from its products. What is its cost structure? It has mainly marketing costs. It pays for networking and events. It pays for subscriptions, as well as the cost of technology products that it sells. What does this say, ladies and gentlemen? It just talks about what are the key things that this business does, what are the key resources at its disposal internally and externally, who are the customers and the stakeholders with whom they interact, and how does all of this create value for the organization? So, for example, look at the customer segments. It tells you the type of people, the type of organizations that this consulting practice wants to pursue. Look at how their channels. The channels tell you how they look for customers, how they prospect, how they generate leads, how they distribute their products, and so on and so forth. Look at the key resources. Look at the key activities. It tells you the key things they do. They send out podcasts. They go out networking and interacting with people at conferences and events and through professional bodies. They use ads on social media to drive their business. All of this points to what is important in this organization and how the organization creates value. Now, why is this valuable to a human resources management professional? And that's what I want us to think about. And right here, I explore it for you on the screen. For you as a HR professional, here are the critical questions, amongst others, that you should have at the back of your mind. Number one, what are the key drivers of your business? So think about all those questions, all those, if we go back to that slide and I'll just show it, the business model canvas has about 9 segments, if I got it correct. 1, 2, 3, 4, 5, 6, 7, 8, 9. Those 9 segments, those 9 components are the drivers of a business. The cost structure, where do we spend money? We need to know it. Now, here's my question. Why is this important for HR professionals? Why is it important? And what are the key drivers of your own business? So you may work in government, you may work in manufacturing, you may work in health care, you may work in restaurants, quick service restaurant, hospitality business, in a school, in a financial institution. Here's my question. In those 9 areas, what are the key drivers of your business? And how do each of those key drivers contribute to the success of your business? You need to understand this as a human resources management professional. The second question, or the second thought, or the second challenge to you is, what are the initiatives in the employee life cycle that can be implemented to support each of these key drivers? And I am introducing, or I am using that language of HR that I believe that most of us are accustomed to hear, the employee life cycle. But just for the benefit of those of us who may not be accustomed to it, the employee life cycle describes all of those activities that take place from when an employee enters the organization up to when they leave. For example, Michael talked about salaries. So that is compensation. It's part of the employee life cycle. Part of the employee life cycle is from the beginning, recruitment and selection. Part of the employee life cycle is onboarding. Part of the employee life cycle is training and development. Part of the employee life cycle is also performance management that we spoke about as the key thing that HR does. Part of the employee life cycle is employee wellness and motivation. Part of it is also things like discipline and grievances and all different aspects of the things that happen from when employees come in to when they leave. So here's the question. What are the things that you, as a human resources manager, can do across the employee life cycle that will support those key drivers? What are the things? What are the initiatives? What are the different activities, the different strategies and tactics that you can come up with to enrich employee motivation so that part of that business model will work properly? To enrich employee training and development so that that business model will work properly. To enrich employee onboarding so that one aspect of that business model or many aspects of the business model will work properly. When human resources management professionals understand the business model of their organizations and understand the relationship between that business model and the employee life cycle, then you are on your way to making a big difference, not just for yourself, but for your organization and for the human resources management profession as a whole. This is how you become a difference maker, by understanding the business model and by designing your human resources initiatives across the employee life cycle to support that business model. So that when you speak as a HR manager and you say, our strategy in HR this year is in line with our business model that focuses on ABC, that to support that aspect of our business model, we propose to do A, B, C. That's amazing. When your executives hear that, they're going to say, fantastic. That's a high quality HR person who understands our business model, who understands the levers that drive our organization, and who can see the relationship between what they do and those strategic levers. And when your executive is so excited and says, wow, Nkiruka, Salam, amazing, Stella, your insights, then you say to them that, yes, I gathered all of this and much more from the Champions of HR Mentoring Program from Learning Impact. Now, that was just a marketing moment for me. The final thing on this slide is, and it's very important, there are three very powerful words there, and I want you to pay attention to those words. The question says, how can human resources management, as the custodian of organizational competence, organizational performance, and organizational culture, support these drivers? So can you see those three powerful expressions? Competence, performance, culture. And I've said that HR is the custodian of the competence of the organization, whether people know their work or they don't know their work. Whose problem is that? That is a HR problem. Because if you don't know your work, if you don't have the knowledge and the skills to do your work, then how are you going to drive success? Whose problem is that? That's HR's problem. Performance. If you don't know what is expected of you, if you don't know how to measure what is expected, if you don't know how to appraise what is expected, how are you going to meet the expectation? Whose problem is that? HR. If you don't know how to behave in the organization, if you don't know what the norms, the values, the behaviors that are consistent with being in this organization, then how are you going to behave properly? Because if you behave wrongly, however good your intent is, however good your skills are, whatever performance KPIs are written down or created, all of it will end up being completely useless if you don't have the right behaviors and attitudes to back it up. So why is all of this important? Because that's your job in HR. Your job is to answer this question. What can I do as the custodian of organizational competence? So for example, what are some of the, let's focus on that one and let me show you something. What are some of the competencies? Pay attention, guys. What are some of the competencies required to deal with business owners and blue chip companies? Are there specific competencies to thrive in that customer segment? Are there specific competencies to thrive in social media as a channel for marketing? Are there specific cultures or behaviors that are required to be able to harness your old clients and to grow your professional networks? Each of these drivers of the success of this company that we are using as a case study, your job as HR is to say, how do we build the competencies? How do we build the performance? How do we build the culture that will drive these things? And if you come up with initiatives and you come up with plans that align these two things, the business model, your employee life cycle, and the overall overarching goal of competence, performance, and culture, then you can't go wrong as a HR professional. So for those of you who have been practicing HR and you haven't been paying attention to things like this, I hope that you are having an awakening. I hope that I'm giving you a paradigm shift. For those of you who have been doing it, I hope that I am reinforcing what you are already doing so that you will do it well and you will do it with full chest, like we say in Nigeria. You will do it with much more confidence and much more assurance that you are on the right track. So we've talked about the business model canvas. And before I jump into the final part of our conversation this evening, I'd like to pause as usual and take some feedback and some comments and some questions and perhaps even some arguments or contrary positions regarding the business model canvas, and HR's role in driving the business model. Please feel free. My producer says I can take about 2 or 3 questions, comments, or contributions. The floor is open. And the virtual chocolates are still available.
Okay, very valuable conversation. And I'd like to also go back to the fact that
Okay. Sounds like Michael was making a contribution. And maybe
if an question, I believe that it will be on both the side of the HR managers and the side of the the people who work in the organization. I think there will be much more successes, because if, for instance, one can answer the questions of what are the key drivers, put it on a list, then you start asking questions also, how does this fit into individuals, and what are the skills, like you mentioned, that whether the company fails, whether people are performing, whether the company is moving forward, everything still falls back to HR. And giving the skills required to individuals who work in an organization to perform is also something that comes from HR. And if they can push this, and even organizational culture as well, can also be made better by individuals who work in the organization, because if HR can push that, can push out a culture that is important for individuals to portray in the organization, it makes for the overall success of the organization. So giving key answers to majority of these questions and putting them down and work with them, like the book of Habakkuk, that you should run with the vision, write it down, make it plain, and make it legible for everybody to see. I think it's really going to drive successes in the organization.
All right. Thank you very much, Michael, for your contribution again, just reinforcing and supporting and sharing your perspective on what we have explored. Would anybody else like to ask a question, make a contribution? Some of us may be hearing about some of these things for the first time. Is there any area of the business model canvas that you would like to get some explanation on? There are 9 components of it. It's a 1-page snapshot of the organization's business model and what essentially drives the success of the organization. Questions, comments, clarifications? Please don't be shy. The smartest people learn by reflecting, by asking questions, and by truly connecting to the content.
Hello, good evening. I have a question, please.
Yes, please, Jemima.
So I would like to ask, the model has 9 components. I wanted to ask, is that a general, how do I put it? Is it subject to
change?
Yes, like can other companies maybe have less or more? Is this a standard?
Yes, I imagine that it's a good question, Jemima. The people who created the business model canvas, who I quite frankly don't remember what their name is, built this model in this way. So, in the world of research and academia and management consulting, what happens is that people sort of build a model, like Dave Ulrich's model, like the balanced scorecard, so this is the business model canvas. There are many ways of expressing a business model, but so long as we use those 3 words together, the business model canvas, this is sort of the typical components of the business model canvas. Now, it doesn't mean it can be changed. It certainly can be changed. It can be tweaked, and, different components can be removed or added depending on the context of the business. And it's a very good question you asked, Jemima, because it speaks to a very important theory. in human resources management, which is about, is there anything like a best practice, or is it just a function of best fit, which is sort of two opposing arguments? That is, is there a best practice for everything? Some people say no. That some people say what is more important is, does it fit your organization? Is it something that does really work for you? So do what works for you. Yeah. So Jemima, I hope that I've answered your question. This is the model. It can be tweaked. It can be played around with. Don't worry too much about whether it's a best fit for everybody. What's most important is do what works for your organization. Yeah.
Yes, thank you.
You're welcome. All right. So I think we've had a couple of questions and a good amount of time. I hope that the rest of you are thinking about the business model canvas. It's a very important tool, not just used by HR people, certainly, but by all business people, in all areas of business, whether it's in sales, in production, in every aspect. So if you interact with companies, if you work in an organization, you should understand the business model of that organization. And we'll talk about that before we conclude. So the final part of our learning objectives, or maybe not the final, the third learning objective, before we get to that conclusion, is about financial statement analysis. And here is where we start crunching the numbers and start talking about numbers. So the business model didn't really talk about numbers. It talked about drivers. But behind the drivers are numbers. And remember, the language of business, the first language of business is numbers. It's Naira and Kobo in Nigeria. It is Cedi in Ghana. It is dollar in America and pound sterling in the United Kingdom. This is the language of business. Financial statements for most businesses by what we call international financial reporting standards usually consist of three statements: the statement of financial position, the statement of comprehensive income, and the statement of cash flows. And I'll try to explain them. The statement of financial position used to be called, and most people will have heard this word before, the balance sheet. The balance sheet is what we now call the statement of financial position. And what it basically does is to show you the financial position of the company today, where it's what we call a snapshot. If you take a picture, one, of the company, one, right away now, what are you going to see? You are going to see the company's assets. You are going to see the company's liabilities. The assets being the things the company owns, the liabilities, the things the company owes. And you are going to see the capital of the company, the amount that has been contributed by the owners of the company. That is the statement of finance. We could spend 3 days exploring and bringing in real life statements for you to play around with, but we don't have all of that time. But at least as a HR professional, you should know that there is something called the statement of financial position or the balance sheet. Next to that is the statement of comprehensive income. The statement of comprehensive income used to be called the profit and loss account. The profit and loss account, which is a really simple way to understand it. Profit and loss. It's either you're making profit or you're making a loss. And the statement of comprehensive income basically lists out all the income that the company has earned, minuses all the expenses from the company to arrive at profit or loss. All right, so that is the statement of comprehensive income. And then the statement of cash flows, its name has not changed much. In those days, we used to call it the cash flow statement. So you just turn things around and removed and introduced a new word. So it's now the statement of cash flows. The statement of cash flows shows you where cash, they say in business, cash is king. If you run out of cash, your business is dead. The statement of cash flows shows where cash comes from, how the company uses cash in its operations, in its investments, in its financing activities, and whether you have a cash surplus or whether you have a cash deficit. The statement of cash flows, how cash comes into the business, how you use it for your operations, for your investing, for your financing, and what is left at the end of every year. These three statements are the fundamental statements of financials in every organization, everywhere in the world. So here's the question. What does it mean to you? And how are you meant to use these things? I introduced some of these components of the financial statements when I was describing them. Your assets, the things you own, your liabilities, the things you owe, your income, your expenses, your capital. And on this slide, I just wanted to explain them further by giving you examples. So for example, if you look on the screen, you would see assets, examples of assets. What is in your bank accounts, your motor vehicles, your raw materials, your finished goods, people who owe you money, your debtors. They are the things you own. They belong to you as a company. Your liabilities, the unpaid bills, the amounts you owe to your suppliers and your vendors, the amounts you owe to your bankers and to your financiers, your income, your sales, your revenue, typically broken down into different products. Your sales from, what they call it? Let's use Learning Impact, for example. Your sales from e-learning, your sales from consulting, your sales from, what they call it, from training activities, your sales from technology solutions. These are different sales. You break them down. They are your income. Your expenses, for example, your sales commission, your program expenses, if like in Learning Impact, if we pay somebody to facilitate training for us, that facilitation commission or facilitation fee is your diesel, your utility bills, your phone, and so on. All of these, internet connection, all of these things are part of your expenses. And then finally, your capital. Capital is the money that was invested in the company and the money that is kept in the company on behalf of the owners. So when companies make money at the end of the year, when they make a profit, that profit belongs to the owners of the company. The owners can decide to retain some of that profit in the company, and they can decide to appropriate some of that profit to themselves. That is the benefit of being an owner. And when I say appropriate, they can pay themselves dividends. They can pay out money to themselves to say, well done, we've had a good year. And at the end of this year, we have paid dividends. If you don't pay dividends, they can retain it. And if you see the expression on the screen there, I hope you can see it, it says retained earnings. So that is part of the capital, the profits the company made that it did not pay out to its shareholders. So back to that question that I was asking before we went into this detailed explanation, which is, so what is this all about? How are you meant to use it? Financial statements are very powerful when they are analyzed. So the first thing you need to understand as a business practitioner, as a professional in the organization, as a HR professional, really care about. What is it that when companies think about their finances, what are they concerned about? So let's talk about that. Because if you understand, think about it this way, as a HR person, if you understand what your company is concerned about, then you can now structure your activities in the pursuit of those things that they are concerned about. I hope I'm making some sense. So from a financial perspective, what is it that companies are concerned about? From a business model perspective, we just discussed those drivers. So from the business model, they are interested in your customer segments, your distribution system, your cost structure, your key partners, your key products. Very nice. Now, but from the financial perspective, what are we concerned about? 4 things. On your screen on the left, profitability. What is the difference? This is the question we're interested in. What is the difference between the money that we earned and the money that we spent. Are we making profits? And is this profit growing? Because if it is not growing, then we're not doing well. The second question we're interested in is liquidity. And think about that. When we say liquidity, you do your hand like this. What are we saying? This is what? This is cash. Liquidity. Liquidity is about what? How much cash do we have? How easy is it for us to generate cash to pay our bills? When we compare our assets to our liabilities, what we have to what we owe, do we have enough cash to pay our bills? Because cash is king. And if you are always illiquid, that is, if you are always not liquid, then you are killing, you are strangulating yourself. Your business is going to struggle. The third thing we are concerned with in companies from a financial perspective is what we call leverage. Leverage. Leverage is about the people that we owe money. How well are we managing that situation? And it's an important point. Companies, most companies owe people money. The biggest economy in the world, the United States, is the biggest debtor. They owe the most money in the world. The biggest companies in Nigeria, Dangote Industries, Bua Cement, and so on and so forth, they are the biggest. They owe the most money to the banks in Nigeria. Owing is not a crime. The question is, how well are you managing it? Are we able to pay our debts? Because if we are not able to pay our debts, then we will not be able to borrow and to attract more money. And why do companies borrow? They borrow because they need to expand. They need to do things. If you waited to have cash to do everything you wanted to do as a company, you will do nothing. You will do very little. Borrowing or leveraging gives you the power to take advantage of. So if you have 100,000 naira or 100 million naira cash, you can invest 100 million naira in new products or in new factories or new assembly lines or new distribution channels. Great. But if you had 1 billion, you could do 10 times that. So with that 10 times power, you can do more, pay off your loan, and continue running your business. So leverage is important. Companies want to know how well levered they are. Finally, and very importantly, but not exhaustively, as I always say, is efficiency. How well is this engine moving? How efficient are our operations? For example, how quickly do we collect our money? Because when you are doing business, sometimes you do business on credits. People buy on credits. So how quickly is our money coming back? How much returns are we getting from the investments that we are making? We have bought equipment. We have hired people. We have done all these things. We have offices. We have invested in technology, in research. Is it giving us money or is it just wasting? Companies are concerned not just with these things, but they are concerned with them from a numerical perspective. They are concerned in the third column with the absolute figure. You see, what is our gross profits? What is our net profits? But they are also concerned with what we call ratios. Ratios compare certain parts of your financials with each other to give you insights, to give you perspective, to give you, a view, to help you to understand and to analyze what is going on. So companies are interested in these 4 things, and they are interested in the absolute figure. What is the total debts that we have? But they are also interested on the screen, and I hope you are following me because I'm jumping around a bit. They're also interested in the debt equity ratio. They want to know between your debt and the money you have, which one is more? They want to know, for example, how many people are owing you money, your trade debtors, absolute figure. But they are also interested in knowing how many days are they owing you money. So we're not just interested in saying, are they owing us money? Yes, we know they are owing us money. Has the money increased? Yes. Or has it reduced? That's valuable. But we are also interested in how many days have they been owing you money? Because if I know how many days they are owing me money, then it will tell me about how efficient I am. Again, my dear friends, financial statements analysis is a program, is a course that we can spend 5 days on. But I thought that a primer like this was important to get you thinking as human resources professionals and managers about these things, what the companies care about. So let's see how we can put some of this to practice and bring it all together. What should HR be doing when it comes to understanding the company's financials? I've introduced the financial statements of organizations to you. I have shown you the things, the 4 things, and I want you to remember them. Does anybody want to try to remember them for us? There are 4 things that we said organizations are concerned with when it comes to financials. Who wants to collect a chocolate from me? 4 things. Does anybody remember? Hey, my people, my people.
Profitability.
In Kiruka,
Liquidity.
profitability, yes.
Liquidity.
Liquidity. Efficiency. Very
and
good.
leverage.
And leverage. And remember what they all mean. They are very important. When you, as a HR professional, if you enter a meeting now and you say those words, you say, from a liquidity perspective, hey, your MD will just do like this. You say, what's going on here? You say, that Oga, once we look at our solvency and leverage ratios, hey, what's going on? They will say, wow, you're a real business professional. You are speaking, because that is the only, when they enter a boardroom and close the door in the boardroom, those are the only things they discuss. How are we doing profitability? CFO, where's our liquidity? How about our leverage and solvency? How about our efficiency? That's all they discuss. Then, unfortunately, they will now call HR. After having those types of discussions, speaking the language of business, they will now call HR. HR, so what do you think about our business? You say, well, sir, madam, we need to be looking at employee welfare. The employees need to be happy. The guy is wondering, what are you talking about? Do you understand what is our concern? As we say in Nigeria, what's our concern in this business? We didn't say we don't want employees to be happy. But this happiness of employees, how does it link to profitability? How does it link to leverage? Because that is the primary focus. It is when we have leverage, when we are profitable, when we are efficient, all our employees will be happy. They will be happy. They will be tired of being happy. This is what really matters. So how are we meant to, and thank you, Ogemdi, for your contribution. And Ngozi, yes, we are going to give you the recordings of all of these on the group. So make sure you are part of that group. So what are you meant to do as HR? 1, you are meant to understand and analyze the financial statements, the concerns of the company, those 4 things that Nkiruka and Ogemdi spoke about, and the ratios, what those ratios are telling you, and the trends. What is the ratio? Remember, I told you ratios help you to analyze what is going on. And we're going to talk about ratios. That will be the final thing we do before we wrap it up this afternoon. The second call to action as a HR person when it comes to companies' financials is to ask yourself, what are the HR, and I should put this in the other way, sorry. What are the non-HR and HR initiatives and strategies that are required to sustain the positive trends in your business and to transform the negative trends? What am I saying here? That when you finish doing your trends, when you see the trends based on the analysis that you do, some of those trends will be positive, some of those trends will be negative. Now, here's what you are meant to do. Ask yourself, to sustain the positive trends, what are some of the non-HR things? And this is important. Why do I say non-HR? What are the general recommendations you can give sitting down in a management meeting that have nothing to do with HR? For example, if our days of collecting money, the time we take to collect money from customers is getting too long, then we can say, From if this is not HR, just as a business person, just thinking about it, I think that maybe we need to be more aggressive with our follow-up. What is the schedule? How do we follow up with people? Who is collecting money? The credit officers, how sharp are they? We need to improve them in that area. Then what is the HR thing there? You say, okay, so if the goal is to have a new credit system, we have a new credit policy, we have to train our staff to be able to use that credit policy properly so that we will collect our money faster. All of this came from your analysis that the number of days that it takes to collect money is taking too long in our company. This is HR that understands the business. And if it is a negative trend, you have to think about, what are the things we can do differently from a HR and a non-HR perspective. Finally, provide recommendations to enhance the business model. Now, pay attention to this. The trends that you see in the finances, when you do your financial analysis, those trends will now help you to do what? To say, let's go back to that business model. Are we thinking correctly? For example, I was telling you about a client I was speaking with yesterday. And when we were looking at some of the numbers of the organization, it became apparent that what they considered to be a key customer segment and had dedicated a lot of resources towards pursuing that segment was all a waste. It was all a waste. They had found after 1 year that pursuing that segment wasn't creating value. And they got that from looking at the financials. So what have they decided now? They decided to stop pursuing that segment. So that segment has been removed from their business model. It is no longer a key driver. That customer segment, that industry that they were pursuing. So here's the point I'm trying to make. As a HR person, you too can look at the financials of them and start to pick holes in your business model and challenge your business model and say, maybe we shouldn't be paying attention to this. Maybe we shouldn't be paying attention to that. Maybe we should be paying some more attention to something else. This is how you, as a HR person, should be using the company's financials. So I'm going to pause again. We've done a lot of, we've brought out a lot of hard stuff in the last 20 minutes or so once we started with the numbers, financial statements, financial statement analysis, all of that hard business acumen stuff. So I want to pause a little, check in with you guys. How are you doing? Is it making sense? What isn't making sense? What would you like to ask or seek clarifications about before we go into our final activity, and we will wrap it up for this evening? Questions? And I know that Michael has already eaten all the chocolates virtual, so he has virtual Jedi. He's gone to the bathroom. He's taking a virtual bathroom break right now. So imagine that there are other people who want to get some of that virtual chocolate and have the same virtual problems that he has. So let's see. Is there anybody else who would like to make a contribution? Ask a question. There's a lot of technical stuff here. It took me many years to understand this stuff. So if you think you can understand it in 20 minutes, that's great. But, don't be shy. If there's something you're not clear about, like Jemima did the other time, feel free to ask that question. It might change your entire understanding and it may help others to understand the matter even better. Questions going?
So, Misha, I was going to say that just a contribution. The old financials of a company actually helps them to make decisions. Most of the time, the bottom line is streamlined to, like I'll call it, it's streamlined to, okay, so what are we doing well? What are we not doing well? What do we need to improve on? What are the both internal and external forces that are driving some of these things. And it's also, it will really help to make very key financial, very key decision in terms of, okay, so now do we need to build more capacity in people? Do we need to train people? So all of these majorly financials of companies actually help them to know how well they are doing, how well their people too are also doing. So that's just what.
And you said something that they teach in whenever we talk about financial statement analysis, is that it tells the story of the organization. If you look at the financial statements of a company, it basically tells you what has happened, just shows you how that has impacted on the numbers. So financial statement analysts are storytellers, you know. Yeah. So it tells a story. Excellent. Anybody else with a question or a contribution? Thank you, Michael.
Thank you.
All right, so let's jump into it then. Let's check on the chat if there's any question coming in. I wish there were more questions. It would help me to understand where we all are with this very, important and sometimes challenging topic. But let's just go right ahead. So remember, I told you about those 4 areas of concern. So we're going to do a little activity around it now. But before the activity, I want to give you a bit of a primer. So there are 4 areas of concern: profitability, liquidity, efficiency, and leverage, isn't it? And here's what I have done. I've taken a company, looked at its 2022 financial statements and 2023 financial statements, and I have analyzed one ratio under profitability, one ratio under liquidity, one ratio under efficiency, and one ratio under leverage. And what I'm going to do is to put you all into 4 groups. And in those 4 groups, you are going to spend 10 minutes to analyze the ratio that you are given. So please, let's pay attention well, because all the groups are not going to be given the same ratio. Just 4 groups, 4 different ratios. You'll spend 10 minutes discussing the ratio, discussing what you have seen, and asking yourself, what will your HR do? What HR initiatives can we use to improve the ratios? So let's go through the ratios one by one. The first ratio is the gross profit margin. Now, the gross profit margin measures how efficient the company is in the production of its core products. Let's say, for example, in a restaurant, the gross profit margin will simply be the gross profit. What is the gross profit? It is in that restaurant, when we sold food today, how much did we make from selling food? That's our income, isn't it? Minus what is the cost of the food? Not the cost of NEPA light, not the cost of diesel, not the cost of, the rents of that place, not the cost of the salaries, just the cost of the raw materials that we use to cook the food. That is what we call the gross profit. It tells us how efficient the core business of a business is. I'll give you another example that is closer to me. If we get a training from Nkiruka's company that we should come and do training for them, and we get that training is 2 million naira, for example. If we get a trainer from outside and pay that trainer 1.2 million to execute that training, we haven't talked about the salaries of Jemima and Regina and Ogo. We haven't talked about their salary. We are just talking about the training itself. The gross profit from that training will be 2 million minus 1.2 million. We have given out 1.2 million just to ensure that that training happens. Then if somebody introduced me to Nkiruka and says that because of that introduction, you will give me 20% of whatever you get from Nkiruka's company. They call it, what they call it, introductory fee, isn't it? Finder's fee. I will pay finder's fee. That finder's fee is core, because without that finder's fee, I will not have gotten that training in the first place. That is the concept of the gross profits. Now, in this particular situation, look at the gross profit margin, dividing the gross profit by the sales. And I don't want to confuse you too much, speak too much mathematics, but here's what I want you to pay attention to. In 2022, the gross profit margin was 42.5%. Now it has reduced to 31.3%. It has gone bad. Why? What can you do? It's not healthy. It means that the cost of doing business in that company has gone up and the revenue has not gone up. So it is a danger sign. Let's look at the second one, liquidity. Liquidity says, how much cash does the company have to pay its obligations and its bills in the short term? I hope you can see the screen. Now, in this company, the company's current assets, when you divide it by its current liabilities, it used to be as high as 2.2, meaning that the company has 2.2 times the cash it needs to pay any BC that it has, as we say in Nigeria. 2.2 times, that's a lot. That means, we are quite comfortable. We have enough cash and assets to take care of our liabilities. But by 2023, that 2.2 has reduced to 1.3. Problem. So what's going on? It has declined. The company's liabilities, the money the company owes people has increased more than the money that the company has. Now that is also dangerous, because it means that very soon the company will be struggling to pay people. By the time that 1.3 gets to 0.9, it means the company does not have enough to pay people. And that is a dangerous sign. Let's move to the next two. So we've dealt with profitability, we've dealt with liquidity. Let's move to leverage. The question it tries to answer is, can the company pay its interests? Like Nigeria now. Nigeria is owing left and right, the whole world, owing everybody. We cannot pay. People don't want to lend money to us any longer. The reason is because our interest cover ratio has declined. Look at this company. For example, in 2022, the amount of profits that it had to cover the interest was 8.7 times, meaning that for whatever interest that the company needed to pay, there was 8.75 for every 1 million interest that the company needed to pay to its bank. It had profits of 8.75 million to pay. So the company was doing well. But by 2023, that number has reduced to 3.25. The company does not have enough profits to pay interest. And you must remember this. It is not only interest that the company is paying now. The company has to pay salary. The company has to pay rents. The company even has to pay, what they call it, dividends to shareholders. So it's not only profits it's not only interest now. The company has to pay tax. So if there is no more money left from the profits to pay all those things, will the company be able to pay interest? And if the company cannot pay interest, what will happen? Unfortunately, people will say, this is not a safe company to do business with, because any small thing now, this company will just collapse. So it's a dangerous trend. The final one, efficiency. The company, how well are they collecting money? The days of sales that is outstanding. How many days does it take to collect money from its customers? Let me ask you a question. In a supermarket, in ShopRite, how many days does it take to collect money from the customers of ShopRite? Let me see if anybody understands this question. How many days?
Same day.
Same day,
Good afternoon,
Angela.
everybody. Yes,
Immediately, correct.
immediately.
On the
10
same
minutes.
day, they collect their money. So if you ask ShopRite, what is the day's sales outstanding? They will say it is 0. There is nothing outstanding. But not every business is like that. Some businesses are credit businesses. Like, for example, my business in consulting, a lot of our business is on credit. We do training and they pay us after the training. They may pay you some parts before the training and they'll pay you some parts after. Abi? Ha. So what do? You have to collect your money. So the question is, how long does it take for you to collect your money? If you are not hungry, if you're not ambitious, if you're not innovative, you won't collect that money on time. So look at this company. In 2022, it was taking them 30 days to collect their money. Now in 2023, it is taking 45 days. Is that good or bad?
Bad.
It's bad.
It's bad. It's getting worse. So what is going on? Because the longer it takes to collect your money from your customers, what does it do? It means that you won't be able to pay salaries on time. You won't be able to pay your utilities. You'll be able to pay your rent and your taxes. And that could put you in trouble. So it's telling you a story. The question now is, what is it that HR is going to do about this? And I want everybody to just look on the screen and take a few seconds to read what is on the screen by yourselves while I create the groups for us to go into. So we're going to go into 4 breakout rooms and we are going to spend 10 minutes in our breakout rooms. And within our breakout rooms, we are going to discuss each of these problems. The first problem is a profitability problem. So the group that is group 1, I'm going to call it profitability group. Please, group 1, don't deal with anything apart from profitability. Group 2 is a group we are going to call liquidity. The liquidity group. Please, group 2, don't deal with anything else apart from liquidity. Group 3, we are going to call that group, what do you call it? Efficiency group. No, that is a leverage group, isn't it? Please don't deal with anything apart from the leverage issue. And the final group, room 4, we're going to call you the efficiency group. And that has to do with collecting of the debts from your customers. I hope everybody is clear about the 4 groups. Yeah. So please, because I remember the last time we had this activity, somebody in another group did someone else's work. So when you enter your groups, you will see the name of your group. So let's talk about it quickly. For example, profitability is the group that Regina belongs to. Liquidity is the group that Michael belongs to. Leverage is the group that Angela belongs to. Efficiency is the group that Abdusalam belongs to. So here's what I'm going to do. I'm going to put you into your groups now, and this is the question. It's on the screen. What are you going to do to address those problems? What are 3 non-HR strategies, not HR, non-HR? What are 3 things that the business should do to improve their profitability, their liquidity, their efficiency, and their leverage? Is everybody getting the question?
Yes, we are.
All right. So does anybody have any clarifications they would like to seek? On those 4 areas before we go into our rooms? Questions going? Questions going? Okay, so let's jump into our rooms and let's spend 10 minutes in our rooms discussing these things and coming up with strategies to improve profitability, to improve liquidity, to improve efficiency, and to improve leverage. All right? Enjoy, and I will see you in 10 minutes. Please appoint somebody who will speak on behalf of your group. We'll get that feedback, and then we'll wrap it up for the evening. See you in 10 minutes. Please go into your rooms. We still have a number of people who are not in their rooms. Please join your rooms. Oladimeji, please join your room. Salamatu, please join your room. Juliet, please join your room. Have the discussions. Lukman, please join your room. Who else is there? Juliet, please join your room. Juliet, Salamatu, Lukman, please join your rooms. You're missing out on all that fun. We still have Lukman, Salamatu. Please join your rooms. And Lukman and Salamatu, your rooms need your help. But there are very few people in your rooms. Salamatu and Lukman, please feel free to join your groups. Like the Yeah, welcome back, everyone. So I imagine it's financial statements and business acumen is always, challenging and different and difficult. Sometimes it depends on the audience and how much experience you have with these matters. But at the end of the day, it's really about the language of business and speaking that language. So let's hear from the groups very quickly. We had 4 groups: profitability group, liquidity group, and so on and so forth. So let's start with profitability. Who is speaking on behalf of the group? And I will just ask, just 1 or 2 simple questions for each group, just to get a sense of what we did. So let's start with profitability. We have 3 people there: Ahmad, Jemima, Oladimeji. What did you guys discuss? Very quickly. Who is speaking on behalf? Let me ask first question.
All right. We did not discuss in our group. It seemed like in and out of the room, or there was nobody at some point. So
No, you should have said so. So what you should have done next time when you're in such a situation, you let me know. Were you in the room yourself?
yes, I was. There were
Oh, I
2.
could have just put you in another room. if nobody
Yeah.
else was in the room. Yeah. So you don't want a situation where you just spend 10 minutes, not doing anything. So did you think about the question yourself?
Yes, I did.
Okay, so what did you think? Tell me. What could you do?
In terms of profitability, I
Mhm.
first and foremost, you need to. So if you see that things were working quite well in 1 year and then not working in the next year, I think
Mhm.
you consider first what was working before that is not working anymore. What went wrong? What was the
But
problem?
let's be specific. We are dealing with profitability. So the question really, Jemima, is what drives profitability? That's where you should be focused on. So what are the things that drive profitability? This is where I want you to be thinking. So remember, gross profit is about the income that a company earned versus the costs of producing that income. Do you remember that?
Yes, I do.
So there are two things that could be going wrong. What are they? So because you are coming to it, but you can hit the nail on the head very quickly. What are the two things that could be going wrong? Number one, it could be that the
Income is not coming in or the expenses are more than.
getting. So what can you do exactly? So that's the story. The story is that it's either the income is not growing or the expenses are growing too fast. So what idea can you come up with to deal
Okay,
with any of
um,
these things? Ehen.
need to be restructured or maybe see if they can diversify or restructure the business in such a way that maybe there are more sources of income or something can be done differently or the expenses are reduced.
So what is a
Uh,
way of reducing expenses in a business? Look at that example I gave. Let's focus on that example so that you can take the learning very quickly. If you are a training company and this was you, it means that the amount you are paying to external facilitators is increasing. For example, do you get my point now? So
yes,
your gross profit is reducing because the amount of money you are paying to consultants outside is increasing. So what can you do about that?
you can either do the consult all the facilitation yourself
By
and your
yourself. Good. So think about that now. So if we now say in this company now, we want to start doing the facilitation by ourselves, what can HR now do to support that? What will be the HR thinking? We want
trainings
training on what?
trainings on facilitation and
Very
being
good. Because we want to get more people inside the company to learn how to facilitate. And the solution to that is employee life cycle training and development. We need to invest in training and development to equip our staff internally with the training skills so that the cost of training will reduce. Excellent, Jemima. Can you see the way we got through this very quickly? By
yes,
focusing on the things that are very important. It is income and it is expense. It's either you are looking for more money or you are managing the money and the expenses that you have. Excellent. Thank you very much, Jemima. That's your chocolate. Please enjoy it. You sound like Mars. You like Mars. Enjoy your Mars. Let's move to the next group very quickly, the liquidity group. And I hope they had a discussion. Liquidity group, who is in
Okay,
that group? Yes.
myself, Sanda, Oladimeji, and Ogem were in the group, and
Yes.
we
Okay.
were able to we had a conversation. So we picked that, okay, we have a product that we,
Hold on, Michael. Let me intervene.
okay,
So there's no product. Look, we have your current assets. You don't have enough cash.
yes, yes,
Your liabilities are bigger than the cash you have, and it's
yes,
getting worse. So
yes.
what is the solution to this problem as a businessman?
Okay, first we said we're going to look at our cost of production.
Your
Are
cost
we,
of product. Hold on, we are talking about cash. You don't have
okay,
enough cash.
okay, so we tied we tied what we are doing to sales. That
Okay,
we don't have, if we are not making enough sales, of course
okay.
we can't
Enough
have
cash.
enough
Okay.
cash. And
All
if
right.
we also are spending too much on producing, that will also reduce
So
the
let's
cash
talk
that we
about
have.
sales. So let's talk about sales. You are not making enough sales. So what can you do to
Okay.
increase?
Okay. So we said HR, we will come up with more visibility on social media. We need to chase people more on social
Very
media.
good. So Michael, can you see how we are hitting it straight now? So the quick answer to this is we're going to invest in digital marketing on social media, Abby, to be able to improve our sales so that we can improve our cash. Excellent, Michael. So what is HR going to do in this area now to help?
We'll also train and incentivize people who can help us post, like staff can start posting on their social medias, our product on social media. We can
and if they do that, you have said you will train them. That's training and development. But you will also create an incentive program, performance management, and compensation management that will help them, isn't it, Michael? That incentivize and motivate them. Thank you very much, Michael, Ogemdi, Sonda, and other members of that group. You have done very well. That if we have a liquidity problem, it's because we are not making sales, we're not generating cash. And to address that, we are going to do digital marketing, and HR is going to provide training on digital marketing, a new policy on commissions for staff, and a new policy on incentives for staff who are able to post on social media. Excellent work. Let's move on to the leverage group. Please collect your chocolates in the liquidity group. Leverage. Who are we leveraging?
Okay, hello, good evening.
Good
My
evening.
name is Stella and I'm representing Leverage Group. So, according to the example you gave from 2023, 2022 example, I used that as a point of contact to tackle the leverage. So, my first point is getting feedback from existing customers or old customers.
Hold on. Leverage is about what? It's about interest. You are not able to pay your BC.
Yes.
You are owing bank money.
Yes.
So why is it that you are owing bank money and you can't pay? Let's start from there so that I will guide you properly to the answer, or you will understand your answer better. So why is it that you can't pay your money to your bank?
It may be because in some cases and occasions, it may be because of lack of sales in some companies and organizations.
Very good. I like that. So lack of sales. You are not selling enough.
Yeah.
And you're not making enough profits. And because you're not making enough profits, there's not enough profits to pay the BC that you are owing. Excellent. These are things that happen to organizations. So Stella, we are on the right course now. So now that we know what the problem is that we are not making sales. So what do you want to do? Tell me the one thing that you are going to propose we should do to improve sales. Give it to me.
One of the main factors of bad sales are because of customers.
Okay.
We should get feedback from existing or former or old customers on why they stop patronizing us, so we can know where to tackle. It may be because of our poor service.
Okay, so you are looking at customer feedback, right? And
yes, customers' feedback.
We get customer feedback and we improve the quality of service, then we might improve our sales. Excellent thinking.
Yes.
So what is HR going to do to support this?
In my own point of view, and according to the discussion we had in my group, I think the HR should make some edits on the company model.
Okay. So,
yes.
Example, to edit the company model.
But yes,
we are talking
really
about customer service. Hold on. You said customer service. You say you're going to send questionnaire and do survey to customers. So let's follow that line. So in that customer service line, what is HR going to do?
The HR can rule out some insignificant aspects of the company model on how to attend to customers and improve their services on how to relate and attend to their customers so that their profit can also increase.
So based on the feedback that comes out from the customer survey, HR can now implement trainings to support the customer service people. HR can now redesign the organizational design, and say maybe the problem is that customer service is not reporting to a senior person. Customer service is reporting to somebody who reports to somebody who reports to somebody who reports to somebody who reports to the MD. And because of that, customer service is not getting attention. What do you think about that, Stella, and your team? Can you see it?
I have that jotted down already. So I was going to talk about 2 or 3 points.
Oh, okay. So I'm
Yeah.
because I'm seeing the points that you have. I'm jumping in. Of course, we are trying to manage time, not just to bring out those things as quickly as and as succinctly as possible. So there is
Okay.
customer service. We say you are focusing on customer service. So everything we discuss must be about customer service and what HR can do
Service.
to deliver better customer service. Thank you very much, Stella, Elizabeth, Angela, and the other members of that group. Excellent job. Please collect your chocolates. Finally, Salamatu, Victor, and Yat. What do you have to tell us about efficiency? The people are not collecting their money on time. So what can we do to collect your money on time?
Well, for our own group, what we discussing for a way forward for us to get the money, that's the efficiency, is for us to see that we motivate
Okay.
the workers so that they will be able to get that funds, because motivation is key. Maybe there is something that is an indices based on the KPI or so being where should lay it out for them. If there's something, an aspect that is not being done well, then we motivate them so that they'll be able to get improve the efficiency in the
In
collection of receipts.
collecting the money. Okay, so what you are
Yes, sir.
saying is that there is money to be collected. That's not the problem. It's not as if
Yes.
we are not making money, but somehow our staff are not hungry to
They're
collect
not
the money.
hungry, yes.
And you are thinking that, so what we need to do is a staff enhungerment program. We need to
Exactly.
enhungrize our staff. And by
Absolutely.
motivating them and showing them that if they are able to collect, there is something in it for them. Abi?
Yes, yes, that's exactly.
Somebody else might also say, I agree with you, and I congratulate you for that. Someone may actually say, maybe the problem is that we have the wrong staff who are responsible for collection. Maybe we need to sack all of them. Maybe that is what do you think about that recommendation? Is it too scary for you?
It's not too scary, but I'm trying to look at the factor that if it's the same stuff we used the previous year, 2022, and then we had
Then all
this
of a
performance,
sudden,
and then exactly, and then
okay,
we're
so
having
maybe they are
2023 now,
demotivated.
then there must be something else on the line. Not really, they're not doing their work.
Very good. It could be something else like
Yes,
motivation
yes,
and or training or
exactly,
capacity building or even
exactly.
a process. Maybe the process needs to improve. Maybe the customers outside are learning how to dodge better. So our people need to learn how to shoot better to be able to catch them. You know what I mean?
I understand you,
It could
and
be
that's
that
why one of us
also.
had to submit. One of us had to submit a proposal that we have to review perhaps the policy already existing, so that we see how we
Exactly.
can make it to.
So
Yes,
to review the credit policy that exists, maybe there are
yes.
some loopholes in that credit policy that need to be reviewed. Excellent,
Sure.
excellent, excellent. Thanks very much. Excellent. So,
Thank you very much. Sure.
ladies and gentlemen, please receive your chocolate. Salamatu, Victor, and Yat. And thanks for your contributions. Have we learned anything interesting about financial statements? I have. I've had the opportunity to listen to you, to hear your various perspectives on, those areas. And here's what I would like us to end with. And I apologize that we have gone beyond the 90 minutes that we planned to go, but I hope it has been worth your while. I know that some of you have struggled with internet connection and have been in and out, but here is the takeaway. Go back to your organization. Develop and analyze the business model of your company using the business model canvas and ask yourself, what can you be doing as a HR department to enhance the business model and to enhance the prospects of your company? Think about it. The business model is very important. It shows what your focus, what your priorities, what your game plan is. Is that game plan working? Do you understand how it works? And how can you improve that game plan? Number two, go back to your organization, all of us, and ask yourself, what are the financial statements of my company? What does it look like? Look at that information. Calculate the financial ratios and learn more about financial ratios. I certainly can't teach you everything about financial ratios, but interestingly, if you go to www.onlineefico.com, there's actually a course there on financial statements and financial management and financial statement analysis. And you can take that course and you can learn in a more extended format about how to calculate these financial ratios. And like we did in the class, in your groups, ask yourself, based on these ratios, what do I see? What are the trends? What can we do to change things in our company? And as a HR person, when you start to do these types of things, you really start to add value. Finally, pay attention to the world outside HR. Read your newspapers. At Learning Impact, we have a product called the e-paper vendor, www.epapervendor.com. Newspapers are a veritable source of intelligence and information that you can use to learn about what is going on outside. Why? Because what is going outside is also affecting your organization. Read the newspapers, watch the business and financial news locally and internationally, participate in industry events. And when I say industry, I'm not saying HR industry. I'm talking about the industry in which your organization works, whether it is food and beverages, whether it is manufacturing, whether it's restaurants, whether it is supermarkets, whether it is government, whether it is what they call it, chemical and petrochemical, consulting, whatever industry your organization belongs to, whether it's a school. Pay attention. Don't just say I'm HR. I don't know anything about banking. After all, I'm just HR. No, go to the banking conference. Go to the petroleum engineering conference, because that is the real business that your organization is involved in. Build your business acumen. And when you do so, you can then beat your chest and say that, yes, you came for this program. You understand why business acumen skills are important. You understand the business business model canvas and how to use it as a HR person. You understand financial statements, how to analyze them and how to use them as a HR person. And you are fully equipped, hopefully today, with some of the things that you can do to go back to your organizations and apply business acumen to HR management. They are not two things that are separate. They are two things that work together to create a world-class organization. If HR people, my dear friends, you do not understand how your business runs and how your business makes money, how can you contribute towards making that business a success? On that note, I'd like to thank every single one of you for your time, for your attention, for your engagement and your participation. And I hope that today's session, although significantly longer than our previous sessions, has been valuable in helping you to understand better your role as a HR professional and how to use business acumen and an understanding of what it takes to succeed in an organization to improve yourself as a HR professional. Yeah. Thank you very much, Elizabeth, for that feedback. Thank you to the organizers, my colleagues from Learning Impact who have put this all together, Joyce and Ogor and Angela and everybody else who has worked tirelessly behind the scenes for all of this. Please note, like I said, we have a WhatsApp group. If you're not yet a member of that group, kindly chat very quickly with one of the organizers who has Learning Impact on their profile name, and they can quickly add you to the group. Otherwise, it's been a great Champions of HR mentoring session for this amazing month of February. And we look forward to March, where we will be exploring another valuable part of what it takes to become a more effective HR professional. The conversations continue on the WhatsApp group, so please join us there. You will get access to the slides, you get access to the videos, and as we always say at Learning Impact, to even much more. Thank you all. Enjoy the rest of your evening and enjoy the rest of the weekend too. Bye-bye.
Thank you, Michelle.
Bye.
Bye.